So maybe you noticed gold fell to a 4-week low and you wondered if this is a quick discount for price or something worse. Is the gold market collapsing? Or is this really about something else entirely? Okay, so remember gold at $3,500 an ounce? It seems like only 2 months ago. Now we're trading below $3,300, down more than $200 in 2 months. Is this a correction or is it something more? Well, we start off saying there's nothing strange or alarming about a correction on its own. They happen all the time, and we've been talking about it for months. You have summer doldrums, just this loss of momentum. The only real surprise here has been the absence of corrections up to this point. Gold ran from $2,060 at the start of 2024 to $3,500 in about 16 months, almost a 70% gain. That's one of gold's strongest rallies on record. Now, where we are today shouldn't really be a surprise. We've covered several angles on this coming gold correction, from summer doldrums to macro factors. It's where we go from here that we need to look at. Now, like I said, corrections are normal, and this was even expected. The surprise factor is simply that the recent news is something that we wouldn't have previously known about, of course, and the recent news is stacked against gold. So Iran-Israel ceasefire, US-China trade deal that was just announced, core inflation increase, all of those are headwinds for gold price. More than summer trends or typical price discovery, these are the kinds of things that lead to actual dips in price. Two of them, though, are good for everything else. Dips in price, it's a pretty good segue to channel sponsor Summit Metals. If you're looking for gold and silver, they're a great place to find them, summitmetals.com. So at the heart of this whole thing, you're either buying gold to protect or you're buying it to grow. Now, this isn't a hard black and white thing. It's not just one or the other, but that's the general idea. Now, most of us here buy it for stability. They buy it for solid savings with a little bit of a chaos hedge side effect. And if that's the reason that you're buying, well, it gets more exciting in certain environments. Well, that environment just flipped. The risk side woke up again this past week, and the US stock market just hit a new all-time high. 2 months ago, when gold was at its all-time high, the S&P 500 was on the brink of a bear market. Now, gold and the S&P 500 don't run counter to each other. It's not a perfect inverted correlation, but the risk on versus risk off correlation is a real thing. And right now, capital is obviously favoring risk again. Now, we could look at all of this and say, yeah, so what? We're here for the gold. So here's some of my favorite gold. But the swings that we're seeing in the market right now, the swings in sentiment, they are pretty wild right now. And the stories of why risky assets like Ethereum could be interesting right now, they do have merit. And don't worry, I'm not suggesting anything here other than the idea that if you're a gambler, the game looks pretty compelling right now. And I try to be realistic here. I mentioned on Friday the problems with listening to certain hype stories about gold or silver, not because I don't think gold or silver are going to continue to perform, just because some of the people out there, well, they're going to push hype even when it doesn't make sense. And if we widen this out beyond the perpetual metals hype channels and consider the big money move in the markets, well, it's moving toward risk. And that takes the spotlight off gold for a bit and even silver, which is a good thing. Now, gold, it's not supposed to compete with Ethereum or tech stock gains or hype. It's supposed to free you up to take those shots if you want to. Now, I'm not suggesting gold is just capital for other things. I'm not saying holding gold is just defensive, like safe or scared or capital for something else, but maybe it's flexibility for any of those things, which means it's not a weak play because it gives you freedom to choose, freedom to gamble if that's what you're into, but either way, it's going to reduce your risk. Now, put that idea into the current risk-on environment and consider whether you should be buying gold. Well, look, gold hasn't really dipped yet. This pullback that we're seeing is a nice breather for price, but it's moderation. It's not really a dip. This is a 4-week low, so it's definitely moving down. But again, no surprise unless you bought into the Basel III story and how that's going to send prices to the moon. But even with PCE inflation data coming in higher than expected, gold barely moved. So change in focus, spotlight on other things. What are we trying to say? Well, a lot of people are looking for clues on what's happening with gold and silver inside the gold and silver markets when the actual signals are coming from really every other market. Price, it's not going to spike because of Basel III. That would be one of those stories inside the gold market. It's probably going to continue to be moderate because investors are into risk again. Now, I'm in the no change camp, continuing to buy some gold, not selling it all to ape into Ethereum, but I am gambling a little bit on other things too, at least to the extent I can. This hasn't been a banner year for a lot of people, me included, so anytime I see somebody saying, now's the time to get all your chips in, well, lately I wonder if there are a few of us wondering where all of our chips went. And it's not about investments, it's more about the business climate, the general economy, the kind of thing that's probably affecting a lot of people lately, but doesn't seem to factor into these strategies that are being thrown around. Now, the big headlines we saw this week, the ceasefire, the US-China trade deal, those are good for the economy, headwinds for gold price. Net positive as far as I'm concerned. The stock market being hot, it's going to divert some attention and some capital, the amount of capital flowing into Ethereum right now, that might divert some attention as well. This is a case where watching everything other than gold and silver is probably giving more clues to what's coming for the metals. So, wrap it up. I don't think the current pullback is alarming in any way. The markets have flipped. The environment flipped. It makes sense that we're going to see gold price cool down. If we just took a realistic look at gold price, though, 3 big hits to price this week, and it's still holding strong just below $3,300. Now, that is a 26% gain for gold price so far this year. It's hard to call that anything other than impressive. So, let's call it good there. The gold market is not collapsing. Risk tolerance just flipped. Let us know what you think, though. If you're concerned about gold price, if you're aping into ETH or something else, maybe you're just holding course. Let us know. And then while you're in the comments, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.